Hello, my name is Carl Graham, and with me is Christina Eichel.
Hello.
I'm a family law attorney here in Colorado Springs, and Christina is in charge of Colorado Child Support Services
For El Paso County.
for El
That's
Paso
right,
County.
That's right. Not the whole thing.
Which is pretty big responsibility, pretty big county. So we're here to talk to you today about child support and maintenance in a family law case. Maintenance, of course, is what Colorado calls alimony. That's available for divorce. Whereas child support could be done for any kind of family law case, from divorce cases to paternity to just regular custody cases as well. Couple things to bear in mind as we're talking is we're going to go through some formulas and some guidelines, and we're not good at math either. We're lawyers for a reason. But even though you might calculate what support or maintenance ought to be owing, nothing in Colorado is automatic. You've got to get a court order. Now, people can voluntarily pay whatever the guidelines provide for, but if you calculate that your spouse owes you $1,600 a month and your spouse refuses to pay, unless there's a court order, you've got no remedy. You have to first go to court and get an order. Second of all is, in a divorce case in particular, usually you're not going to get an order until the end of the case. However, if the other spouse is just flat out refusing to contribute anything towards expenses, or pay any support, and there's a substantial disparity, you can get a temporary orders hearing. It takes 2 or 3 months to get a temporary orders hearing. In a divorce case, only takes 6 to 10 months anyway. So by the time you get to court, you only have a few months left of support, but the court can give you a temporary orders hearing. Third is that in most family law cases, maintenance and child support are only available retroactive to the date that the other party was served with the paperwork. You cannot get support retroactive to that, with one exception.
And this is if under Title 19, which is a different statutory provision for paternity cases and then some support cases, the court can go back in time. Paternity case can maybe go back all the way back to date of birth. And so those cases are brought. If you have a case with our office, the Child Support Division, we won't file for that, but if the parent files for it and gets a court order, we will enforce and collect that. Same with anything, though, we need a court order to enforce and collect. That's what we're required to have before we can start taking enforcement action.
And finally, in Colorado, you can pay and receive maintenance or child support through either directly to each other or through the Colorado Family Support Registry. Family Support Registry is strongly encouraged. It creates a permanent record of the dates and amounts of all payments. So there's no quibbling over, whether or not somebody made a payment in March of 2017, and you have to go back and look through check registers and bank statements. And I think, isn't it required for CSS assistants to pay through the FSR?
Correct. We're required to have that. Also, all income assignments are required to be paid through the Family Support Registry for support or maintenance. And we also strongly encourage it. It's required, again, with our office, because it's no fun if an order is 15 years old, trying to figure out 15 years ago what got paid. That nobody's happy at the end of the day with those cases.
Okay. And next thing to bear in mind is that rarely are child support and maintenance written in stone. They can be modified. However, just like the initial award, you don't have any automatic modification. Now, especially that comes into play for child support. If you're paying support, let's say you're paying $1,500 a month support for 3 kids, and the oldest kid turns 19 and emancipates. You don't say, well, I'm paying $500 a kid and reduce your support down to $1,000. The formula doesn't work that way. First, you have to get a court order. And second of all, even once you do, if you look under the guidelines, you're probably still going to be paying $1,200 or so. It's not a linear reduction per child. And then finally, child support in particular, if you do all the calculations and support's only going to be modified down by $50 a month or something, and it's not 10% difference in the support, the court won't change your support. Okay, first real substantive consideration is, what is income?
So income is the key. Child support is based on the combined gross income of the parents. It's the key determination, I think, in maintenance as well. And so it's kind of the baseline for everything. So, and in Colorado, basically almost everything is income. Income from employment, commissions, bonuses, tips, dividends, royalties, trust income, capital gains, pensions, VA benefits, although not taxable, they are income for child support purposes and maintenance purposes. So basically almost everything is income. And then when calculating income, Colorado uses gross monthly income. So that's before any taxes are deducted.
It's probably easier just to look at what's not income here in Colorado, because pretty much we start from the assumption that if you're receiving it, it's going to count as income unless there's an exception in the statute.
Sure. So that's a second job. So if you're working full time, so you have a 40-hour-a-week job or a 35-hour-a-week job, and then in addition on the weekend you work 20 hours a week, your additional second job is not income, or the income from that will not be considered in calculating the support. Voluntary overtime is not income. Mandatory overtime actually is income and is used in the calculations. Child support that you receive for a different child is not income. Means tested public assistance benefits, probably the most common are TANF for temporary aid to needy families, SNAP, which is the food assistance, things along those lines. Social Security benefits the child receives due to the death or disability of a step parent. If it's due to the death or disability of a parent, that's something else. But if it's due to the death or disability of a step parent, it's specifically not included. And if it's a parent, it may be factored in, but not on the guidelines.
And also, if your IRA has grown in value, but you're not taking distributions, that doesn't count as income either. Employee benefits, they're a mixed bag. Some of them count, some of them don't. It's not uncommon for employees to have a varying income. The bonuses or commissions they receive change from month to month or year to year. I've had clients tell me in my office, but my bonus isn't guaranteed. Okay, when was the last year you didn't get a bonus? Well, I've always gotten one. So judges, they see these cases all the time. They're just going to average out the income that the bonuses that the person receives. Usually the court's going to look at 2 or 3 years worth of bonuses. I have seen them go back as far as 5 years. Deferred compensation isn't that common, but if the person is an employee is receiving deferred comp that he or she is not presently allowed to spend, that does not count as income. Company cars, they're not that common either, but if you are allowed to use it for personal use, there might be some benefit to you. Employer housing, however, is more common, especially in the military. But contractors working overseas might get employer-provided housing. They will count. The value of the housing will be added to the person's income. If your employer is paying for health insurance or contributing to a 401k, those employer contributions do not count as income to the employee. However, the amount the employee pays does count as income. So if the employee has a match, let's say the employee is putting $1,000 a month into the 401k, he has a choice of spending that money on living needs or investing it in retirement. And because he has that choice, that does count as income. And same way for health insurance. What the employee pays for health insurance is not deducted from his or her income. However, as Christina will explain later, if the health insurance covers the kids, that employee will get a credit for that. If the business if the employer reimburses the employee for travel expenses, in theory, they could affect your income. In reality, unless you've got somebody who lives on the road and is really just making a profit from extensive travel, most of the time this isn't going to be enough to factor in.
I don't know that I've seen a case where we've had it come into play.
I haven't seen a case in probably 10 years or more where this has come into play. I've seen people try to argue it, but most of the time the courts reject those arguments. A few military specific issues. First, all pay and allowances count for purposes of child support and maintenance. Not just base pay, but the untaxable allowances, BAS, BAH, COLA, flight pay, everything. If the member is living in on-post housing, the court's required to impute in income. Impute is a word you're going to hear Christina talk about a little bit more, but impute means basically pretend he is making. So you got a soldier in the barracks, not receiving BAH, but he's receiving free military housing. The court will generally include in that member's income the value of the BAH he would receive if he lived off post. If you've got a civilian employee working for the government or a private employer who's also in the reserves or guard, usually the reserve or guard income is not going to count for purpose of child support and maintenance. And the reason is because, as Christina just explained, it's a second job that takes you over 40 hours a week. There are a few exceptions in obscure or weird cases. If you work for an employer where it's a condition of employment that you're in the reserves or guard, I think that would only be if you work for the Department of Defense. I don't think a private employer would be allowed to do that. Then in theory, the court might add it in. Let's just say it's pretty rare. VA disability, something quite common and hotly contested here, and also combat-related special compensation, they count as income, period. They're not divisible as assets. Your spouse can't get the VA disability divided like a military retirement, and it's not taxable, But if you're receiving it, the court's required to count it for purposes of maintenance and child support. And then finally, if you've got a payor or either parent is receiving post 9/11 GI Bill benefits, the monthly stipend, which is the E5 BAH amount, usually $1,500 or so a month, that is going to count as income, but the tuition reimbursement and the book stipend do not.
So if you're self-employed or if the other parent is self-employed, it's tricky. What people just need to remember is that it's not necessarily what's on your tax return. Things that are completely legitimately claimed on your tax return may not be something that can be claimed for child support or spousal maintenance calculation. The income is determined based on gross receipts minus ordinary and necessary business expenses. So normally, in our cases, the court and our office, if we're actually working on the case, will ask to add back expenses that reduce living costs like car, cell phone, home office, etc., as well as accelerated depreciation. And so it's not exactly what's on taxes. You do use the tax returns as a starting point because what allows you to see what's being claimed and what's being taken off, but not all of that will be taken off for the purposes of calculating income for support.
And final thing on self-employed is if the parent or spouse is either an officer or controls the company, all of the earnings from that business, at least that spouse's share of the earnings, will count as income, even if they're not distributed. I've had situations where a spouse will keep certain earnings back in the company, sometimes very logically and sensibly to build capital. But the K-1 will show that spouse is getting $200,000 of income. That K-1 is going to be the starting point for purposes of child support and maintenance.
So what if a parent's not working, to their full potential or is only working part-time, for example? Then we look at this issue of underemployment. So either being voluntarily underemployed or unemployed. The court finds a parent is underemployed or unemployed voluntarily. The court can do what Carl talked about earlier, which is impute income. Say, okay, the parent's not actually earning $2,000 a month, but is capable of earning $2,000 a month. In this case, we're going to use that for the purposes of calculating support. If the court decides to impute wages to somebody, what income should be imputed? The court will look at things like employment and earning histories, education, literacy, assets, barriers to employment, the local job market, etc. In Colorado, current minimum wage is $12.32 an hour. Generally, if the parent has no work history, no, education, they're not done with school and just graduated with, they're a medical doctor and they just graduated, they're going to obviously look at different incomes. But if they simply have no work history, usually that's a good starting point. But underemployment and imputation is becoming the exception, not the rule. The standard is shirking. And that means that the person is actually foregoing higher wages or higher income or employment. An involuntary layoff, even for cause, is not shirking. One of the things the court will look at is whether the parent is making a good faith job search to replace their prior wages or to become employed. If a parent retires early, you say they're 50 and they say, I'm done working, I don't want to work anymore. Normally the court will find and impute wages to that parent as long as they don't have some type of disability.
On this last point, I've had a few cases where a military member retires from the military, serves 20, 25 years. They're usually still in their 40s or maybe 50-ish. And as far as they're concerned, they're retired. Hey, I'm getting a military retirement. I'm retired. Well, the answer is no. You're retired from one job, which is the military, but you're still able-bodied and you should still be working. So the court's going to impute an income even if you are receiving a military retirement.
So when does the court not find it underemployment or unemployment? There's a couple, and I just have kind of the summary here. So the parent is enrolled in school full-time or in school part-time and working part-time. The employment is temporary. The employment is a good faith career choice. And there's a set of factors the court looks at. So one case that's kind of famous in Colorado is the lawyer who quit his job and went to become a rancher, a farmer, something, a farmhand, something like that. And the court said, no, you could be making more than that. And so, but if it's a good faith career choice, for example, if you have someone whose career is no longer available to them, or the industry is no longer what it once was, and they choose to go into a different career, that's something the court can look at. The court is also not going to impute wages, it's not permitted to if the parent is physically or mentally incapacitated, they're the primary caregiver for a joint child that's under the age of 2 or 24 months, and the parent has been sentenced to 180 days or more, so they're currently incarcerated either in jail or the Department of Corrections.
Now, on this last point, the the court will not impute a salary to somebody who's incarcerated, but
Sure.
as Christine explained earlier, the court's always going to look at actual income. So if that incarcerated person still has a trust fund paying him money or is getting military retirement, then the actual income is going to be used. Okay, so maintenance. Maintenance is what Colorado calls spousal support or alimony. Unlike child support, which is meant to care for the kids, maintenance is meant to provide for the former spouse to help with his or her own needs. It's available to either spouse without regard to sex. You could be a husband, you could be a wife, you could be in a same-sex marriage. It doesn't matter if you've got a higher income earner and a lower income earner, and the lower income earner qualifies for maintenance under the statute, that spouse will then get maintenance. And finally, because Colorado's a no-fault state, you can't say, you know, he cheated on me, he shouldn't get alimony, or he abused me, he shouldn't get alimony. Sadly, neither of those matter. We're a no-fault state, so you owe maintenance regardless of marital misconduct. The court first has to decide whether or not it's even appropriate to award maintenance. This is what we call the threshold. And there's no exact science to this, it's an art. The court's supposed to consider the incomes of both parties, the property set aside to each party, each spouse's financial resources. So financial resources means any other money or investments they have, funds from family, etc. And also the reasonable needs during the marriage. You often hear people say, you know, keep me in the standard of living I had during the marriage. Well, most people lose their standard of living a little bit after divorce, but reasonable needs are defined by what you did during the marriage. If you were in a high income marriage, Bill Gates or Jeff Bezos, for example, their spouses will have a far greater need for maintenance, you know, for trips to Switzerland or whatever, than our spouses would, for example. So next is, once the court decides that maintenance is appropriate, there's a whole bunch of factors the courts are required to consider to decide both the amount of maintenance and how long it's paid for. And there's a little bit of duplication. So this screen here, the threshold, this is whether or not maintenance should be paid at all. Once the court decides maintenance should be paid, a new set of factors kicks in for the court to decide what amount of maintenance should be paid. And the court is supposed to consider each party's financial resources, not just incomes, but overall resources. There are other assets, the spouse's needs, the ability to pay, the lifestyle during the marriage, the marital property each spouse has, their historic earnings, how long they're married for. Sorry, I got to move the screen here a little. The spouse's age and health, a whole bunch of factors. And finally, the court's also required to consider Colorado's advisory maintenance formula. Now, for a lot of people, including lawyers, the maintenance formula is the be all and the end all. It came into play in 2014. And unlike child support, which has a presumptive guideline, the maintenance guideline is what we call advisory. It's one of the factors the courts are required to consider. And a few rules to consider. First, when the spouse's combined incomes are below $240,000, there is an advisory amount of maintenance. Second, you add up the gross incomes from all sources, not just salary, but if there is military retirement, if there's disability, if there's a trust fund, you add those in as well. You multiply the combined, I apologize for the math, I hate math too, but we've got a real world example shortly. You take the combined total, you multiply it by 40%. That's what the lower income earner's share is 40%. Then you gotta subtract out their own income from that 40%. And then finally, you've got to factor in the possibility of taxes. So starting in January of 2019, new maintenance awards are no longer taxable to the payee or tax deductible. That's just a change in federal law. So to adjust for that, the Colorado Assembly modified our maintenance and our child support statute. So if the spouse's combined incomes are below $10,000 a month, then once you calculate the formula maintenance, you then reduce it by 20% for tax-free maintenance. And if their combined incomes are between 10 and 20,000, you then reduce maintenance by 25%. But a little bit unfair because that also affects child support. So they also have a plus up for purpose. And by the way, you're going to be, Christina will show you a child support worksheet in a little while. the child support software will do these calculations for you, but it will plus up the maintenance by 25% if it's not taxable. Okay, so what does this really mean? Let's go through a couple of hypotheticals. Husband earns $6,000 a month, the wife earns $2,000. Their combined incomes are $8,000. The wife's 40% share would come to $3,200 a month. Well, she's earning $2,000 a month already from her salary, so what remains is $1,200. That's the starting point for maintenance. Because maintenance under this hypo is not taxable, you have to reduce it by 20% or multiply it by 80%. And the ultimate result is there's non-taxable maintenance of $960. Second scenario, the wife earns $8,000 a month, the husband earns $6,000. Combined, they're at $14,000. Husband's 40% share comes to $5,600 a month. Well, he's already earning more than that. He's already earning $6,000. So even though the wife out earns him, no maintenance is payable under our guidelines. Rather than trying to remember the formulas, just Google the term Colorado Maintenance Calculator. One of the first sites that pops up will be the official state calculator you can use for this. So that was the amount of maintenance. How long do you pay maintenance for? Well, it depends on the length of the marriage. If you've got a marriage that's lasted fewer than 3 years, rarely will you have a maintenance obligation. It's possible you will. If you've got a young child, a spouse left his or her job to be a stay-at-home parent and care for a young child, a court might decide that maintenance is also appropriate. But most of the time, unless you have a 3-year marriage or more, you're not going to be looking at maintenance. If you've got a marriage between 3 and 12 and a half years, look in the statute. There's a chart that goes through every single month. You add a month length of the marriage, or every 3 months you add, it increases maintenance by a month. But the sliding scale starts at just under a third for a 3-year marriage. And by the time you get to a 12 and a half year marriage, the duration of maintenance would be half the length of the marriage. Once you're at 12 and a half years of marriage, in under 20 years, you pay maintenance for half the length of the marriage. Over 20 years of marriage, it's completely up to the court. I mean, it's always up to the court, but over 20 years of marriage, it's going to be a minimum of 10 years of maintenance, but it could be indefinite. And when I say a minimum of 10 years, if you got a 40-year marriage and the spouses are both 60, it might not really be 10 years because they're going to retire in 6-7 years. And once they retire, maintenance might end anyway. So the starting point would be approximately 10 years of maintenance. Okay, I cannot stress this enough. Colorado's maintenance formula is only advisory. Now, for purposes of quick calculation, quick negotiation, I got to confess, we use the formula fairly regularly, and we rarely deviate as attorneys behind the scenes when we're doing our negotiations. Likewise, I've argued maintenance more times than I can count in court, and most of the time, the judges will end up awarding maintenance pretty close to or exactly at the formula amount. However, the court cannot blindly apply the guidelines. There's several recent cases, especially where judges have done that. And I've seen it happen firsthand. Judge will say, well, the guidelines provide for $840. I find that to be an appropriate amount. You still have to introduce your sworn financial statement, introduce evidence of need, evidence of ability to pay, the incomes. You got to give the court something to work with. And then the court, even if the judge orders the guidelines amount, at least the judge had all of the other factors and evidence to consider. And finally, for the wealthier people going through a divorce, if the combined incomes exceed $240,000, there is no guideline, period, none. You can't say, well, judge, the guidelines would provide for this amount because for tax and a whole bunch of other reasons, the guidelines are inapplicable. And when judges have applied them for incomes over 240, the appellate courts have reversed them. A few other closing thoughts on maintenance. When either spouse or either former spouse dies, maintenance terminates. For that reason, usually the court's going to require the payor to carry life insurance to protect the flow of maintenance in the event he or she dies. If the payee, not the payor, but the payee remarries, usually maintenance is going to terminate. I say usually, unless the spouses have agreed that it will continue past a remarriage, it's going to terminate. I think I've had 2 cases in my entire career where they've had that agreement. Cohabitation, however, does not end maintenance. If one of the former spouses lives with a new boyfriend or girlfriend, you still owe maintenance to that spouse. Now, it may well be their living needs are diminished if they're sharing household expenses. So you could file a motion to modify maintenance based upon reduced living needs. But you can't say because that person's in, a committed marital type relationship, they shouldn't get maintenance. That doesn't work. Finally, to modify maintenance, assuming the spouses have not agreed that it's not modified, that's a lot of negatives. The spouses can agree that maintenance is non-modifiable, but if it's ordered by the court, it's always subject to modification. And if there has been a substantial and continuing change in circumstances, usually that's going to mean one of the spouses lost a job or got a gigantic pay raise or pay cut, not a minor one, but a big one. Then the affected spouse could file a motion to modify maintenance.
So child support. So in Colorado, child support is paid until each child reaches the age of 19. That's the general provision. A lot of people think it's 18. It's not. In Colorado, it goes until the age of 19. A child can emancipate before the age of 19 if the child joins the military, and that doesn't mean they just sign up, but when they actually go and report and become active duty military, or if the child becomes married. If a child leaves home and goes and gets a job and is supporting themselves and is living independently, the court can order that child has emancipated early. A motion would need to be filed, though, unless the parents have an agreement, which they could then file with the court. Child support can also go beyond the age of 19. So if a child is still in high school, child support continues beyond the age of 19, but not past the age of 21. If the child is in high school at 19, child support will go until the end of the month following graduation, but again, not past the age of 21. Child support can also continue indefinitely if a child is disabled. So unfortunately, if a child had a medical or other type of disability and was not capable of emancipating and supporting themselves, himself, herself, child support can continue. But the disability has to occur before the child reaches the age of emancipation. If the child's 30 and has lived on their own for 10 years, and that child becomes disabled, that would not impact or be relevant to child support. So what are the factors in child support? So the big one is gross income. We talked about that quite a bit before, including maintenance, the number of children the parties share, the overnights. So what parenting time each parent has with the child. If it goes over 92 overnights, we go on to what's called a worksheet B, and we're going to talk a little bit about that in just a minute. If either of the parents has non-joint children, either living in their home or for whom they're paying child support that are also still under the age of 19, whether either parent is paying or both are paying daycare for their shared children, health insurance costs for the shared children, and then rarely we have cases where a child has income that reduces household needs and expenses, and then that's also a factor on the child support guidelines.
On the child's income issue, I don't think I've ever seen a court count income of child. I can imagine a scenario where they would. Most cases, you get a teenager working a part-time job, 10, 20 hours a week. The money they make goes for college saving or goes for dates and nice clothes and gas for their own car, unless the child is actually paying rent to the parent they live with. The court's not usually going to count the income. So.
Agreed. So what happens when each parent has more than 92 overnights? We go on to a worksheet B, and then it begins to take into account each parent having to have expenses related to the child or children in their home for more than 25% of the time, which is the 92 overnights. If you have more than one child and the kids are on different schedules, so kind of a typical example is there'll be a 5-year-old and a 15-year-old. Parents have 50-50 parenting time for the 5-year-old, but the 15-year-old is involved in sports and work, has a part-time job, and that child is spending, because of all that, is spending more time with one parent than the other. So there's different overnights with each parent. You would average the number of overnights. So you add up the total. In this example, there's 3 children. Mom has equal parenting time with 2, 100 with a third. You total those overnights and divide by 3. I think it rounds to 122.
It actually comes to 155.
Oh, okay.
That's my bad math. So.
This is why you have the calculator, do these things for you.
Yes.
So here's an example of a worksheet B. So you see mom has $2,000 in monthly income. Dad has $6,000. Dad is paying maintenance to mom of $1,200 per month. So it subtracts that $1,200 from his income, adds it to mom's. So mom and dad combined have a monthly, under line 2, have a monthly adjusted gross income of $8,000. There's actually a table in the statute, and it will say, okay, for combined gross income of $8,000 for 2 children, the basic child support is $1,631 per month. So that's the amount of support that the children should be receiving between the 2 parents. And obviously the parent who has the children, primarily in their home has expenses as well. Even if they're not paying child support, they're paying, mortgage, rent, all those good things as well. So it takes into account the overnights. In this example, dad has 140 overnights, mom has 225. Takes into account the work-related childcare. The childcare amount is adjusted to take into account the federal tax credit for daycare. So that's why there's an adjustment from $200 to $154. There's no education-related daycare. There's health insurance. That's just the children's portion of the health insurance premium dad is paying. And then it comes down to the bottom and calculates $501.92, or we'd round to $502 dad owes mom.
Don't try this at home. Attorneys use software to calculate this. If the court's website actually has child support software you can install to calculate this as well. It's possible to calculate it by hand using a pen, piece of paper, and the guidelines in a calculator. But it's very hard. So
Yes.
yeah. A lot of moving parts, as you say, and this doesn't even take into account complicated situations.
So a lot of times parents will think that if they have the majority overnights, or even if the parents have 50-50 parenting time, that there won't be child support. But in this case, in this example, mom has substantially more income than dad. She's earning 4 times what he is each month. There are 2 children, even though mom has double the number of overnights as well. Mom is going to still owe child support to dad, and that's because of the income differential. And the same with 50-50 parenting time doesn't necessarily mean that there's no support owed. What if each parent has children with them primarily? So for example, if one parent moves out of state, some kids are with mom. In this example, one child's with dad. How is that calculated? So you calculate dad's obligation to mom for the 2 kids with her, mom's obligation to dad for the 1 child with him. You offset or net those 2 child support amounts. So you don't have each parent paying. It's just one parent pays the difference. Guidelines are a must. Like Carl was saying, child support guidelines are presumptive. Sometimes we have parents go into court, or they'll file with the court and they'll say child support should be $500. In the court, though, cannot just approve that or say, okay. The court is required to review the guidelines and the parties' financial documentation before approving any agreements. The court is required to run the guidelines. The court can find cause to deviate from the child support guidelines. That means enter an amount different than the guidelines, but the court has to make findings on the record or in writing to support the deviation. So probably the most common example is the guidelines are run, parents have shared parenting time, and the child support is like $8 mom owes dad. And the parents just don't even want to be worried about that. So they'll agree to 0 child support. And even though that's minimal, it's a deviation, and the court will generally approve things like that. But sometimes we have parents come in and they want to have very large deviations from the guidelines. The court's going to want to know, and the party should be prepared to discuss with the court and explain why that would be appropriate.
I will say that I've seen a court deviate from the guidelines at a final orders divorce hearing without the parents. When the parents agree, as Christina said, assuming they have good reasons for it, the court will often accept it. Not always. I've seen courts reject it, but the court will often accept it. Mm-hmm. However, I've only ever seen a court deviate from the guidelines without the parents' agreement. I think 1 case in 20 plus years of practice. And that was an extreme case where mom had a live-in nanny because she traveled a lot and she had primary care. And the result was it was a real high child support award. And the live-in nanny also did some other services, I think, as well. But the court decided it just wasn't fair to make dad pay for all of that and reduce it down a little bit. One thing that will not reduce child support is I can't afford to pay. I've had lots of cases where parents have said that. That is not one of the grounds the court's allowed to deviate from in the statute.
Correct. And you can't permanently waive child support, and you also can't enter an agreement to say that child support is non-modifiable. You can do that with maintenance. You can agree that maintenance is non-modifiable. Child support is always modifiable if there's a 10% change in the amount of support. So it's not a 10% change in mom or dad's income. It's a 10% change in the bottom line amount of child support. What other expenses? So we saw in that worksheet below the line, there was some daycare, there was some health insurance costs. What is typically off the worksheet, although a parent can ask to have the court consider it included, and that's unreimbursed medical expenses of over $250 per child per year. Normally that's divided by percentage of income. Why? Because it's fairly uncommon to have a recurring expense. Every once in a while we'll have a case with a child with a recurring medical expense for a chronic health condition, and that's something that can go on the guidelines. but most of the time the expenses vary. So the court will, or the parties will agree, or the court will order that just be divided between the parents pursuant to their income after the first 250. Normally the primary parent pays the first $250. Transportation costs, same thing, normally divided pursuant to income. Extracurricular activities. College is not something that is currently on the child support worksheet. I believe there's a provision, and this is something we don't deal with, so you may know more about this than I am. And that is, if they have an agreement, the court can still address it.
Correct.
Okay.
In the 90s, courts were permitted to order payment towards college expenses. They changed the statute in 97. If the spouses agree in a divorce, or I guess in a regular custody case, if they agree to contribute towards college, that agreement is binding and the court will enforce it. Without an agreement, the court is prohibited from ordering either parent to pay for college expenses.
You should never withhold child support for unpaid expenses. We have this all the time. Parents will basically voluntarily offset against their child support. Well, he owes me $100, so I'm going to pay $100 less in child support. You never want to do that. You always want to keep child support separate and apart. Otherwise, if our office is involved, we'll think you're in arrears. We'll take, enforcement action. So you never want to do that.
We've got ways of enforcing non-payment of expenses. Don't mess up the accounting by underpaying child support.
So child support belongs to the payee. That means the parent who is receiving child support has the right and is presumed to be spending it on the child, to be, paying for their, rent and their lights and their utilities, etc. And the other parent can't really demand an accounting of that. Child support is not taxable. And again, child support received, if it's from a different parent, is not included in it as income even. There is a provision in the child support statute that says the court can have the parties exchange financial information annually. We see that quite a bit in the DR cases, the divorce and allocation of parental responsibility cases. So that's something the parents can ask for. Again, I don't mean to keep going back to the Family Support Registry, but if you can at all make payments to the Family Support Registry, please do that. That is just a permanent record. If you choose not to, if you're paying child support directly, you must keep record of every payment made for the life of the order. So if your child's one for the next 20, however many years you're paying child support, you have to keep those records. So that's something to keep in mind.
I have a real live horror story, fortunately not involving Christine's office, where the mother went to a child support unit in a different state and claimed that my client had not paid her anything for the prior 3 years. He was not paying through any registry. He was actually, worst of all, he was actually sending her money orders instead of even checks where you have canceled checks. He'd done through all of his records, and out of the 36 months of missing payments that she was claiming, he proved 33 or 34 of those payments were actually made. Well, instead of the child support unit saying, well, okay, and then he swore that he also paid the other 2 or 3, he just couldn't find proof of it. Because he couldn't find proof, he was found in arrears for those 2 or 3 missing months. Even though the mother had lied about not receiving anything for 3 years, she was still found credible with respect to any payment my client could not prove. So the bottom line is the payor will always have the burden of proof to prove the payments made. So just bear that in mind and protect yourself. Pay through the registry if at all possible. Okay, and that concludes our presentation. Normally we'd be taking questions right now. Unless somebody snuck into this Zoom conference right here, I don't think that's going to be happening. But Deborah, are you there to end the recording?
Yes, I am. So I'll go ahead and do that now. Thank you so much.